Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Let's get ready and prepared for the FOMC report. Jerome Powell, Chairman of the Fed. What are we going to get tomorrow? In this live stream, we're going to discuss what we might get tomorrow and what it means for the markets and how we work with it to get the best from our portfolio. It could be a big surprise. We could get a rate cut. Nobody thinks so, but we could. More importantly, tomorrow is not about the rate cut or the lack thereof. It is the language that Jerome Powell uses. Will he give us a dovish report tomorrow, or will he be hawkish? If we get a hawkish report tomorrow, it could be sayonara for the stock market. It could be absolutely awful. We're going to cover all the news, what I think is going to happen tomorrow as we look at the Fed with all the money stacking up. Are we going to turn the money printer on? Is it time to make money? Or are we going to be scratching our heads and trying to work it all out? Can we make money from this? Or is it the new dawn of a golden era? The first report since Donald Trump took office? Well, we're going to find out in just a few hours. We have a few polls running. You can take part in our polls if you go to our community pages. We'll cover it all. I hope you will join us for that. Please do take part in that. But during this report, what are we going to get? What can we expect from Jerome Powell? As we can see, the markets have sold off since the beginning of the year. Year to date, the S&P 500 down 4.8, a terrible, terrible start. One of the worst starts, one of the fastest declines over this period of time ever in history. We've had much bigger drops, but not this quick. This is very, very unusual. The whole world is turning against the United States, or is it? I'm going to share with you some numbers which might give you some encouragement. It's not all as bad as you might think. So without further ado, let's get straight into it. Tap the like button and consider subscribing to our channel. And I'm going to break down some numbers for you today and some thoughts that you might consider for tomorrow. First of all, here's a personal welcome into my thought process of Jerome Powell and tomorrow what you might expect from the Fed. Here we go. Welcome behind the scenes of my studio. It's lovely to have you all once again with me. Tomorrow is a critical day. It's the first report we've had since we've had Trump in power, and it's going to change everything. What he says tomorrow, Jerome Powell, the chair, will change everything, and the whole world will be watching, not just the United States. We've seen over the last couple of months, since Trump took office, the markets go down considerably due to tariffs, uncertainties. I've got lots of videos on that. But tomorrow, this event here will change everything. It does appear Trump, actually, what he wants to do is to drive down interest rates, as he's working closely with Elon Musk in the attempt to pay off the national debt, because if the interest rates are down, he can save billions of dollars in interest, thereby reducing the national debt. I believe Trump is trying to get a free trade around the world with three heads: himself representing the United States, Putin for Russia, and Xi Jinping in China. Forget the G7, forget the G8, it could be the G3. And I think I think Donald Trump wants completely open trade. That's why on the 2nd of April, like for like, reciprocal tariffs. If you are charging the United States 2%, he'll charge you 2%. If you're charging us 200%, he'll charge you 200%. We've seen it already being applied and talked about over wine. Will it actually happen from Europe? Well, tomorrow is a big day. I don't believe there is any evidence to support a rate cut. like we've had in the past with pressure put on him, Paul Volcker, who actually reacted, and then we saw what happened. It came back and it was worse than before. I think Jerome Powell has learned that lesson, and he's not going to react quickly. He's not going to drop rates quickly just to make Donald Trump happy. That's why I think the tariffs have been so violent and unpredictable, to try to bring the markets down, to try to force Jerome Powell to actually drop rates. I'm now going to give you some insight from analysis who have put together this presentation for you, and also some insights the way the world is seeing the United States right now, and you can come to the conclusion of your own. I've already made my mind up. I'm going to share my thoughts with you at the end, but I've also positioned myself for every eventuality. If it goes down, I can buy more. If it goes up, I do absolutely nothing. Okay, I'm not selling. I only own the S&P. I'm simply accumulating, not selling. So let me share with you the analysis I put together for you and thoughts around the world towards the FOMC report tomorrow. Join us live. It'll be on this event up here. This is where we'll be tomorrow at 12:30 Central Time. That's 1:30 Central Time. A big event. It's not necessarily just about what what Jerome Powell says. It's how he says it. That's what's most important. So get ready for that event. Let me now give you some analysis. Okay, so here we go. I'm going to bring this up for you now, and I've put together this set of facts and information. See what you make of this. Here we go. All right. If you've just tuned in, consider subscribing to our channel. Let me just spin my chair around again. I forgot to pan myself out. There you go. Do you like my chair, by the way? This was bought for me by the Lucasades. So let's have a look here at this. If you've not yet tapped the like button, please do consider liking the stream. And also, if you wouldn't mind, it'd be nice to tap the subscribe as well. That'd be wonderful. If we can get 100 likes in this stream, YouTube will suggest it out to more people, and more people will learn about what we should expect tomorrow from Jerome Powell. So please tap the like button. We've got 199 people watching live. If we could get 100 likes by the time I come to the end of this, it would be absolutely fantastic. We've got a poll running. Please take part in the poll. Slower economic growth is likely ahead, and risk of a recession rising. Some might say we are already in a recession. Remember, just like a bull market and a bear market, you don't know you are in it until afterwards, when we look back on it to find out we may already be in a recession. And if we are, remember, typically over history, recession provides the bottom of the market. It's why I've said I believe we bottomed. I see a ton of people now tapping the like button. Thank you so much. We're very close to 100. Please, let's get to 100 and share this out. Here we go. Probability of a recession rose to 36% from 23% in January, according to the CNBC Fed survey, which polls fund managers, strategists, and analysis. So we've got more people now believing that a recession is on the cards. We even may already be in one. The average 2025 GDP forecast declined to 1.7 from 2.4, with tariffs now seen as the top threat to the US economy, replacing inflation. I have to just warn you and remind you that, in fact, tariffs are not inflationary. They are only inflationary very, very short time initially. They're not inflationary long term. So even though no one likes tariffs, doesn't think it's a good idea, they are not inflationary long term. So we need to remind ourselves of that. A lot of people get carried away and think that's going to send inflation up. It's for those who don't fully understand how this works. 3/4 of respondents forecast 2 or 3 quarter point cuts this year. That I am in agreement with. And I've said that for 2 years. I called the bottom, I called the top, I called the bear market, I called the bull market, I called when the first rates would be. I also called that we would get a rally on last Friday. I called the CPI, the GDP, the PPE, called all of these things, 23 trades, 23 wins, and I've been saying 2 to 3 cuts in 2025. That's absolutely going to happen. Let's move on with our next point. Here we go. Jerome Powell. Let me clear the deck so I can get all this on the screen for you. Let me just tap that so it's a bit clearer. There we go. Respondents to the March CNBC Fed survey have raised the risk of recession to the highest level in 6 months. A lot of that came out of the Michigan report, which was very political. A lot of people decided that the economy is terrible and everything that Trump is doing is terrible. You may or may not agree with Trump, but the Michigan report is useless. It's very political, and a lot of people like to throw their way into the ring based upon nothing other than their own meandering thoughts, and that serves no purpose to me whatsoever. I'm an investor. I do not want people's opinions. I want the facts. So the fact that more people have raised concerns of a recession have no bearing on my investments. They have cut their growth forecast to 2025 and raised their inflation outlook. However, we still have growth. We are not recessionary. We are not going backwards. Much of the change appears to stem from concern over fiscal policies from the Trump administration, especially tariffs. Tariffs have taken center stage now for the longest period of time. It's all been about tariffs, tariffs, tariffs. However, these are going to go away, whether they're watered down, whether they're rolled back, negotiated or whatever. They're not going to be a long-term issue, but everyone is focusing on that. Remember, the stock market is merely sentiment of what the value of stocks could be, not what it actually is. Much of the change appears to stem from concerns over tariffs, which are now seen by many to be the top threat to the economy, replacing inflation. Now, that's actually a good thing, because inflation we can't do much about. We can, the Fed uses its weaponry to fight against it, but it takes time. Tariffs can go away just like that. And I think, as we proved on a video we did a couple of days ago, the reason for all this is not necessarily to be a bargaining chip to negotiate tariffs. It's more to do with the fact that Donald Trump wants to bring rates down simply to pay off the national debt quicker. That's what it's to do with, I would say. The outlook for the S&P 500 declined for the first time since September. The 32 survey respondents, who include fund managers, strategists and analysts, raised the probability of a recession to 36% from 23% in January. The January number had dropped to a 3-year low and looked to have reflected initial optimism following the election of President Trump. But like many consumer and business surveys, the recession probability now shows considerable concern about the outlook. Like I've just commented, I don't feel threatened by that. We've had an abundance of discussions with investors who are increasingly concerned the Trump agenda has gone off the rails due to trade policy, says Barry Knapp of Ironside's Macroeconomics. Consequently, the economic risks of something more insidious than a soft patch are growing. The degree of policy volatility is unprecedented, said John Donaldson, director of fixed income at Haverford Trust. The average GDP forecast for 2025 declined to 1.7 from 2.4, a sharp market down that ended consecutive increases in the 3 prior surveys, dating back to September. GDP is forecast to bounce back to 2.1 in 2026, in line with prior forecasts. No recession. Oh, thank you very much indeed. I've got a new member.
become a member.
Thank you very much indeed, B. Welcome to the family. I'll give you all your perks later on. I'm making this video during a live show. So no recession here. We're expecting things to grow in 2026, and 26 will be here before you know it. We're already in March. And once we get to April the 2nd, the day after April Fool's Day, that was picked on purpose, then I think things are going to improve. Every other claim I've made has been spot on so far. The risk to consumer, and the reason why I'm so confident about my claims is not, and my predictions, is not because I know more than anyone else. In fact, I probably know less. The difference is I don't have an axe to grind. I don't have any reason to say one thing or another, and I'm certainly not doing it to sell videos. I'm doing it to serve my members, the best service I possibly can to provide you with the most accurate information. That's why I do this channel. That's why I make these events live. So let's look at it. The risk to consumers spending are skewed to the downside, says Neil Dutter, head of economic research and Renaissance macro research. Alongside a frozen housing market and less spending across state and local governments, there is meaningful downside to current estimates of 2025 GDP, only very temporary. Fed rate cut outlook. Okay, let's look at the predictions. Most continue to believe the Fed will cut rates at least twice and won't hike rates. Now, most people don't think that at all. 1 minute it's 3, 1 minute it's 4, when it's 5, none. I have always been 2 to 3. Always. In fact, as far out as 2 years ago. But others do change their mind every 5 minutes. Even if faced with persistently higher prices and weaker growth, 3-quarter forecasts 2 or more quarter point cuts this year. Part of the reason is that 2/3 believe that tariffs will result in one-time price hikes rather than a broader outlook of inflation. I thank you very much. 1 minute people are saying we're going to it's a threat to inflation and the economy, and we should be concerned about this, and next minute we're getting actually it's only a one-time deal. It won't affect the future inflation. People don't seem to be able to make their mind up. But the policy uncertainty has created a wide range of views on the Fed than normal, with 19% believing the Fed won't cut at all. My thoughts are there will be no rate cut tomorrow because Jerome Powell does not want to be a Paul Volcker. These are, but I expect 100% a rate cut in June. The March rates, 100%. No one believes there'll be rate cuts tomorrow. What if there were rate cuts tomorrow? Well, if it came with a hawkish tone, it would be terrible. It would look like a Paul Volcker. It would look like the Fed was reacting to Trump. That would show weakness. So what does Jerome Powell do? What Jerome Powell does is what Jerome Powell has always done. Stick to exactly what he says, the data. The data does not suggest a rate cut tomorrow. However, if he did cut tomorrow with a dovish tone and a good outlook, saying the economy is genuinely sound, it could be a big catalyst to the market. And Trump would declare it as a triumph and a win, thereby reducing the national debt. 2 or more cuts this year, 77%. No cuts, 19%. Likelihood of a US recession, 36%. I don't see that happening at all. Finally, before I go to a global perspective of the United States, Powell is really stuck here because of the tariff overhang, said Peter, Chief Investment Officer of Bleakley Financial Group. If he gets more worried about growth because of them and cuts rates as employment rises, but then Trump removes all the tariffs, he's jumped the gun. More than 70% of respondents believe tariffs are bad for inflation, jobs and growth. 34% say tariffs will decrease US manufacturing, with 22% saying they will rise the result in no change. Look at what's happening with Tesla right now. It's got nothing to do with tariffs, got everything to do with personalities. You can't buy a Tesla in Canada. They're refusing to buy them. Same as in Germany and parts of Europe as well. People are walking away from Tesla and buying something else. This is nothing to do with inflation or fears. It's to do with personalities. This whole thing is to do with personalities at the moment. 37% of respondents believe tariffs will end up in a greater manufacturing output. More than 70% believe Doge effort to reduce government employment is bad for growth and jobs will be modestly deflationary. A global trade war, and that's why we're going to come on to that next. Haphazard Doge cuts to government jobs and funding, aggressive immigration deportations and dysfunction in DC threaten to push what was an exceptionally performing economy into recession, says Mark from Moody's and analysts. Okay, let me bring back up on the screen our S&P 500. There I have to lean forward to do a face recognition. Let me now bring you some news I've put together for you of how the world is looking at the US economy. This is very, very important. If you've just tuned in, please do tap the like button. I'm giving a full analysis on the breakdown of what we might expect tomorrow. I'm hoping to get 100 likes so we can get suggested on YouTube and more people can learn about this news today. So if you could tap the like button, that would be amazing. And consider subscribing as well. That would be fantastic to the channel. Thank you very much. Let me bring you the way the rest of the world is actually looking at the US, outward looking in. The US versus the rest of the world trend is still holding up at the moment. Now, let's just remind ourselves just for one moment how important this actually is. Before I bring you a very important chart here and the way the world is looking, let's just do a little bit of history just for a moment. Hence, we've in fear that we forget the way the world actually works. Let's go once again behind the scenes. Here we go. There's only ever been a handful of empires. Roman Empire, the British Empire, a few others around the world over history of human existence on Earth, and none of them exist today. The British Empire at one point occupied 1/3 of the world, and now we're back to being a one island again with a Commonwealth that's getting smaller and smaller every year. America has never been an empire. It's a country, a very powerful country, an amazing country, but however, it's not an empire, and it never will be now either. I'm sure Donald Trump wishes it could be, but it's not going to happen. We have a totally different global economy and global structure. That will never happen again. But America is one country. There are many other countries wishing they had the power to be America. And if they all come together, they can. There's 195 countries. I know. I've toured every country of the world as the World Piano Man. I've been literally everywhere over 37 years of touring. So I'm fully aware of the way people see America and their opportunity at any point to try to compete. China have been waiting for this moment for many, many years. They would love the yen to be the global currency and not the dollar. It's currently the dollar, and the reason why the dollar is held up is because of the might of the military. Military is what keeps the dollar in place with the way people buy, trade and sell arms and defense around the world. It holds the currency, it holds the decision being the dollar. That doesn't have to be that way, but that is how it is. If you look through history, every 100 years or so, currencies change. Don't assume forever that whatever anyone does in the United States, whatever the president says, whatever people say, that the status quo will remain the same. Not necessarily. But as I'm going to show you now, the report at the moment is holding up in favor of the United States, but it might not always be this way. Other countries, like we've seen now, other businesses are starting to compete with Tesla. Tesla may actually be the best EV car company in the world, but people just don't want to buy it anymore. All over Europe, let's not forget Canada, just simply have walked away from Tesla. But guess what? EVs aren't declining. In fact, they're increasing. They're buying BYD instead, a Chinese company. So just remember, if we do upset our partners around the world, there's always somebody willing and waiting to take your place. But at the moment, the United States is holding up. Let me show you what I mean. Okay, so I'm going to share this piece of information with you. Excuse me, I've got a little itch on my nose there. This is being made live, so anything happens. Let's go over to this and let me share you this bit of information. The US versus the rest of the world trend is still holding up. US equities compared to the rest of the world are still holding their long-term uptrend despite recent relative outperformance. Very often I get criticized for only owning the S&P, the benchmark. People say you're not really diversified unless you hold all world. And there's a very good argument for that. But for integrity of this show, I am fully in one stock and one stock only, the S&P 500. So you know exactly what I'm doing. I'm in one thing only, and that way I can't be accused of pumping and dumping or influencing anything as we grow. I never wanted and never will do anything like that. But it is true to say Europe now is booming, and China is doing well again, and Germany are doing tremendously well at the moment. But anyway, at the moment, US equities are holding up compared to the rest of the world and are still holding their long-term uptrend despite recent relative underperformance. In a note, Katie Huberty, Global Director of Research at Morgan Stanley, pointed out that even when the US equities have recently underperformed as other developed markets such as Europe have outperformed the S&P 500 versus MSCI ACW ex-US, relative performance is still substantially up. We're still okay, but just don't take it for granted. Okay, you can see our uptrend here, the S&P 500 versus MSCI ACWI ex-US relative performance. We're still doing okay. All right. The iShares MSCI ACWI ex-US ETF is up 9.6% year to date, while the MSCI ACW ETF, which includes the US, is up only 0.11% year to date. So, is it understandable why so many people are selling their positions in the US economy and buying other countries, other world, or other parts of the world? No surprise at all. However, I'm not a trader, I'm a long-term investor. I do what I say what I do, and I'm backing the US economy. But it's difficult right now. We're paying a price for that. Donald Trump drove the market down on purpose, we believe, but it's coming at a price for all of us. It's just very, very difficult right now. As you can see, the market is still going down. The S&P 500 has recently seen great sell-offs and is down 4.6 year to date. Tell me about it. According to Morgan Stanley's Euro Equity Strategy team, funds have been debating Europe versus the US allocations, with flows into Europe equities picking up while flows into US equities slowing down. The iShares Europe ETF is up 16.4% year to date. The Stocks Europe 600 is also up 9.7% to date. So there we go. At the moment, the US is holding up, but for how much longer? And as investors, we look forward. And that's what happens. The economy is not the stock market. Not at all. The stock market doesn't even represent the value of the businesses. So you often wonder why on earth we invest in it in the first place. Well, there's no other better mechanism. This is what we have, and we have to make it work. But the economy is 6 months behind the markets. People buy where they see the market being in 6 months. At the moment, they're selling. Now then, Have they oversold? Are we going to get a bounce on the FOMC report tomorrow? Let's think about that for a moment. I'm only in the S&P 500. I will show you my actual position here. You can see we've been bouncing down and we're holding at this level now. 1 week now, we're holding. What does that mean? What does it really say to us? Well, in my opinion, and again, this is an opinion based on facts and facts alone. I don't get emotionally involved with any of this. I only get emotionally passionate about making videos and making a production and putting on a show. And I get passionate about my members who watch me every day. I get passionate about that. But I do not get passionate about numbers. They're just facts. And facts, simple. 1 + 1 will always equal 2. Right now, we have got the S&P 500 trading around 19.7 times earnings. There's never been a better time. Well, I say that recently. We've been as low as 6.5 times earnings. So historically, it's not as cheap as it's ever been, but overall, this is a very good time to buy. Anything under 20 is regarded as oversold and a good time to buy. And that's where we are right now. Now, remember why we're here. Most of the businesses within the S&P are performing well. And why I'm in the S&P compared to the QQQs and NASDAQ is because tech is great and we've got plenty of weight of tech in the S&P 500. But second to that, we've got financials. Now, if you are an AI investor and you're a crypto investor, you're probably not paying attention, but you should be looking at the financials, because they're the ones who are going to make the money from crypto, not the messing around with the buying and selling, the horse trading of individual crypto coins. That's small change. The real investment is in those that are going to use it. And that's the financial sector. And that's why I'm in the S&P. It's balanced. The QQQs and the NASDAQ is far, far more weighted in tech and hardly any financials. I believe the future is always the future, where the price is going next. And the S&P over history has performed well. And I believe now it's going to outperform those others, because I think the other stocks, the AI and so on and so forth, is still good, but it's going to slow down. And we're going to move into defenses, healthcare, and financials. These are the sectors of the future for the next 5 years at least. Don't get me wrong, Nvidia still going to do great, but we've had a massive pop, and I don't believe the bubble's going to burst, but it's going to steadily mature and have a steady growth as financials. And those stocks that slept through 2022 and 20, of course, during COVID, are now waking up and starting to find new ways to grow because of efficiencies with AI and crypto and everything else. So right now we've got, in my opinion, the S&P 500. Let me just do that. There we go. The S&P 500 is now a good value, in my opinion. That's why I'm buying it. What do I want to see tomorrow? Well, before I tell you what I want to see tomorrow and give you my opinion, I'm going to see what you have been saying. We've got a poll running right now on our investor pages. I'm going to bring this up right now, and it's been very, very popular. This is one of our most popular polls we've ever done. Let me give you the link to it, and you might like to vote and have your say. This trends on Google. These are our investor pages. Here we go. Let me drop this into the chat for you right now. There you go. There you go. 3 links there to our community page. It's on the homepage of where you're watching right now. You can vote. The question is, surprise rate cut. It could happen, and as long as Jerome Powell is dovish, it will be good. I've asked you, what do you think tomorrow will bring? A pause, a hike, a cut, or 0.25 and 0.5. At the moment, there's 58% of you saying pause, but there is 29% of you saying a 0.25. There's 6% saying a hike. I think people are messing around with that one. I think you are right with a pause, but 29%, nothing like what the media is telling you, 0. Why would the media not tell you? Well, as the media always does. It never tells you the truth. I cover all the mainstream media. I watch Bloomberg and CNBC. I cover all mainstream YouTube channels. They're all telling you things that benefit them. whatever sells the story, whether it's drama, whether it's doom and gloom, whether it's get rich in 5 minutes, whether it's political, whatever. This channel does things differently. We tell you like it is, how it is, and that's it. So that doesn't reflect what mainstream media is saying. Mainstream media has been saying no chance in hell of a rate cut. Now, because this is on our investor pages, mainly this is being done by our members, real investors that study, watch the show every day, have a good idea what they're talking about. And they are saying a rate cut is on the cards, 29%, nothing like what the media is saying. Well, we are mainstream media. However, we do things differently. I have no sponsors here other than my members. I have no one here telling me what to say. I tell you the truth, and I don't care whether it's good for my stock or bad for my stock. I only own the S&P. I want to do what's right for you, my members, what is true. So let's see if this has changed. I've given you the chance now to vote. We had 248 votes in the last couple of days. I think last 24 hours. Great. Let me refresh this screen. 248, 58%. 248, scroll down, 248, 248, 255. Wonderful. You've just voted 55%, 59% now say a pause, but still 28% are saying a rate cut. We could get a rate cut tomorrow. Let me tell you, we call these polls here the Lucas Archie. Like the Fibonacci chart, we have a Lucas Archie, and it works. These have always been accurate. Whether people think a stock's going up or down, or it's bullish or bearish, these always prove very, very popular and always prove accurate. So 28% could be a rate cut tomorrow. Hence the name of this video, this live stream, surprise rate cut. If it's dovish, the markets will boom tomorrow. If it's bearish and reactionary, that will go the other way. So now you have some information that you can actually use. How are we going to navigate this tomorrow? Let's talk about that, and then we'll come to your questions as well. Absolutely fantastic. And if you would like to, we can even open up the phone lines and do a live phone-in. All right, so all of that will come up next. So let me close the Lucas Archie on our investor pages. Let me go back over to this screen here, and I completely forgot my train of thought there. What was I going to do? Was it questions? There's something I was about to do then, and I've completely forgotten my train of thought. It's a live show, folks. And I've completely forgotten my train of thought there. I cannot think what I was going to say. I'm going to give you my thoughts on what I think tomorrow. Answer questions. Anyway, I've forgotten. But I want to show you this. I've been telling you that the sector to look out for is the financials, the stock that's been sitting and been asleep. And you can't get more of a good measure than the Bank of America. Can't get more straightforward than that. Look at this. When did you last see that? In 1 week, when the markets are so down, what do we see? The bank that we think is going to use XRP up 4.45%. What do you make of that? This is a sleeper stock. These are stocks that hardly move. They are high dividend payouts, but they move very, very slowly. But yet, financials is outperforming. Tech, it's outperforming the Mag 7, up 4% in a week. This is exactly what I've been saying for the longest time. Get ready for the S&P to once again outperform itself. Its weakness is also its strength. I hope you understand that. So there are my thoughts. Now then, you have voted on the poll. You think tomorrow is going to be a rate pause. Some of you think it's going to be a cut. I actually think tomorrow that it's 50-50 between a pause and a cut. I'm right on the fence. And that's very bullish to believe that we could get a cut that strongly. 50-50. We're definitely not going to get a hike, and we're definitely not going to get a 0.5%. But tomorrow could be a pause. Most people think it is, but I also feel very confident in a pause. However, I'm giving a 50% chance that we could even get a rate cut of 0.25. And as long as that comes with a bullish term, that would be a dovish language. It will be good. Now, how am I navigating this? What am I doing with my real money? And again, I can't pump and dump anything. I only own the S&P. I'm 100% invested. But I am extremely bullish. I guarantee you I am more bullish than anyone watching this channel. I bet you any money, and I'm going to prove it. If you look here at my main portfolio, you will see that I am 100%, first of all, in the S&P 500. I think it's the best asset you can own now. Honestly believe that. Otherwise, I wouldn't do it. 99% of my money, $258,000, is in the S&P. My Roth IRA, and this is all the money I have in the world. No money in the bank. Literally $10 in my Bank of America, £10 in my Lloyds Bank in England. That's it. I use all my money. It's always invested. If I need some cash, I earn money on YouTube. I buy it on my Robinhood credit card. I pay it off at the end of the month with the money I've earned. I always have money coming in, and I have no money in the bank. The moment I get paid, I pay my credit card. I pay my bills. All my bills are paid on my credit card as well. Always paid off at the end of the month, no interest. All my money goes into Robinhood immediately. Okay, and when I say every bill gets paid on my Robinhood, I mean every single bill gets paid. My UK bills and my US bills. Every single penny is invested in Robinhood. Every penny. Plus more. My Roth IRA is 100% of the S&P. And as you can see, 100%, that's my real money. I've now got $300,000 all invested. Now, you might say, well, how have you got 300,000? Oh, it's just 103. Well, if you look here, I'm also fully in with all of available margin. $259,000 invested in my main account, $36,000 in my Roth IRA. That comes to just a few grand short of $300,000. I'm 100% invested all the way, right? So no one can be more bullish. Every penny I've got in the bank, in cash, and all of margin. How could you be more bullish than that? There's no more money available to me. Every penny is invested. This is what I've been doing. Over the last 14 months since I started my portfolio, I started with $5,000. I've now got $300,000. So, done pretty well. 23 trades, 23 wins. I tell you how it is. That's it. Ask me anything and I'll answer it. Live on the show, this is my real money. I started buying the S&P 14 months ago when I came out of all other stocks. I recognized my channel was growing and I wanted to be the most honest channel in the world. And I thought I can't be that if I'm buying stocks individually. People who accuse me of pumping and dumping. I also can't get CEOs on the show. And now I get CEOs all the time. In our show this morning, people wanted to talk about Gorilla. I literally emailed Gorilla and I've already had a response. I have CEOs call me up live on the show. To do that, you got to be in the S&P and nothing else and be fully transparent and fully honest. Show everything to everybody. So that's why I do that. 14 months ago, I started buying the S&P at the bottom where we were 14 months ago. And I was buying it and buying it and buying it. And every time we had a macro dip, I never, ever bought on the way up. Ever. I always bought on macro dips. Macro dips is when something happens externally of the businesses that I own. I understand the businesses very well. I cover all the earnings calls, read all the balance sheets. I interview the CEOs. I interview hedge fund managers on my X and Instagram. There's my X and Instagram. I talk to CEOs and managers all the time. Follow me on there. Members, I will engage back with all of you. So I realized what the businesses that I own. I understand the companies that I own, and I started to buy the S&P, and I never buy on the way up. I simply buy macro dips. So when something's happening externally to do with a war, or someone says something, or Elon Musk says something, or Donald Trump says something, and the market goes down, but the economy is strong and the business is strong, I buy, and I double up each time with great conviction. I go all in. I buy as much as I can at that moment, and I never sell, and I never trade. When I said 23 trades, 23 wins, that's on my Roth IRA. I never trade on my brokerage account. Okay, so that's how that works, okay? So now what you've got is I'm buying. My average is not going down, it's going up. And there's nothing wrong with that. People on YouTube always talk about dollar cost averaging. It's rubbish. It sells videos for people that just want simple cartoon headlines. Rubbish. A good asset that appreciates over time naturally becomes more expensive. You can't go back and buy a house that's now $1 million for $10 like it was thousands of years ago. You can't do it, right? It goes up in price. The S&P goes up in price because even by default, stocks go up because of inflation. Even if a company goes sideways, your valuation of your stock will always go up, even if it goes sideways, because inflation and money printing, not because it's worth more money, it's because money has been devalued. That's why stocks always go up long term, even if a company is going sideways. So when you get macro dips, you buy. People say they do, but they don't. I actually do buy the macro dips. So I've been doing that. When Trump came into power, I said this would be bad for the economy at first. There would be a lot of uncertainty. There didn't need to be. The tariffs were violent and crazy and unpredictable. That's his style. We're getting used to it, but that's how it works. So when we started to get those dips, I would buy. I'll show you what I did as I did it and how this will lead into tomorrow. If we look here, I'll scroll down and show you my positions. This is my history. I will open it up. I'll give you more and more all the way through. You can see when I last bought, I'm buying all the time, buying lower and lower and lower and lower and more and more and more on the way down. Hundreds. I've got 577, I think now, shares of the S&P. Okay. I never buy on the way up. And every time it goes back up again, I warn people, do not buy on the way up. We are at war. We're at war with tariffs. We're at war with the rest of the world, turning its back on America. This is a very difficult time. When every time we get a rally, Wall Street dump it. They're not investors, they're traders. So what have I been doing? I've been buying on the way down. My average, overall, my average has been going up because I can't buy what it was 14 months ago. That's impossible. And waiting for it to go down there is foolhardy. Because now we are oversold. We're oversold on the RSI. The S&P is around 19.7%. It's hit bottom or around about bottom. I've called bottom several times and we're there. It hasn't gone much lower. In fact, it hasn't gone any lower in the last week where I've been calling it. And this is where I said it would go. Not because I look at charts, nothing to do with charts, because I speak to CEOs and I know when they're buying back and I know how they feel about the market. That's how I make my financial decisions. I'm looking at what people are actually doing, who actually buy, who actually work at the factories that I own. So that's why I've been buying. Now then, on Friday, 2 days after the event, I get paid on YouTube again. I've got no more money to buy. There's no money in cash. There's no money in the bank. And there's no money in margin. I'm fully in. On Friday, I get paid. I expect to buy another 10 shares of the S&P 500 as long as it is as low as it's been. Where it is now, a little bit lower, about 506 is my lowest level. At that level, I'd like to buy more because I don't need to buy any more shares. I don't need to pay any more money because I've got enough shares with 577, whatever it is, to get to $1 million by the end of the decade without ever buying any more. That's my that's my aim. That's the name of the game. That's what I'm doing. I'm not changing the goal, the goalposts. That is exactly what I plan to do, and that's what I will do. I always get it done, and I'll always deliver it. Okay, so I don't need to buy anymore. But if it goes lower, I will. Because buying lower, even with margin, strengthens your position. It improves your position because when you own a quality asset with a low maintenance level like the S&P 500, by buying more on the way down, it actually strengthens your position. This is not the time for reducing margin. Reducing margin is when everybody else is buying and it's going up. Because when everybody else starts buying and it goes up, that's when the Fed are reducing rates. I don't want to be buying on the way up. I've been buying when it's difficult. I've been buying when everybody else has been giving up. That's what I've been doing. So I've been buying on the way down, and I'm happy to do so. And as it starts to go up, rates will be coming down. It'll be easier and easier and easier for me to pay the margin interest on my stocks. I'm virtually now at the point that my dividends on the S&P covers the margin. Not quite there, but it's getting closer and closer all the time. When rates come down with a few more shares of the S&P, which I may get on Friday, I should be very close to covering the cost of margin just with my dividends. Forget the growth. The growth will be additional. So that's what I'm doing. So tomorrow, I don't expect a rate cut, but I'd say it's 50-50. If it comes with a dovish statement, the markets are going to go rallying up. I won't be doing anything. When I get paid on Friday, I won't be chasing the market and getting FOMO. I'll be just dumping the money into my account, reducing my margin, paying less per month in interest, and my portfolio will rally. I have a potentially $60,000 pump day built in to my portfolio. With the amount of margin, the amount of stock that I've invested, I am now 2 and a bit times the speed of the market. If you're 50-50, you'll double the market. So if it's up 1%, you're up 2%. If it's down 1%, you're down 2%. Right now, because of the amount I've got, I'm about 2.5 times whatever the market does, up or down. But I believe I've got the bottom. If it does go lower, I've got plenty of room in my margin. I'm very disciplined. I have a certain level I don't go over, and I'm sticking to that. So it can go down 20%. And it's already gone down 12, and I'm still okay. And I'd buy more if it does. I'll go right up to the line. Absolutely right, because that's the moment when everybody starts buying in. But I don't see it going that low. But who knows? It just might. No one can tell. Okay, that's my strategy for tomorrow. Now, I'm going to give you the link for the event. So you can join me, because we're going to have members-only questions tomorrow, and so we can help everyone. There's going to be a lot of questions. A lot of people are going to go, what should I do with this stock? What should I do with that? So I want to be able to answer everybody's question, and we'll also open up the phone line. We'll have people calling in at the same time, being on the screen with me, so you can have your say and you can talk to me directly on the show. So going to give you the event for tomorrow. And first, we're getting a lot of new members coming in already. I'll show you on the screen. The event is pinned to the top. Here is the event there. If you want to be the first people that leave questions and comments will get their names answered, whether they're members or not. Let me go over to the event. You can see here, we've already got 6 people waiting for an event that isn't even happening till tomorrow. Let me just clear that away. My screen is just the dock. There we go. I've got a little backup button there. You don't even see that. 6 people waiting already for an event for tomorrow. This is going to be extremely busy, and people have been becoming members all day to be able to take part in the live phone-in, the live discussion. What should I buy? What should I sell? All this kind of stuff. And we're going to answer every one of our members' questions tomorrow live in the show. If you want to become a member, it's only a couple of bucks. We offer the most inexpensive membership plan on YouTube, and we give you 20 times back what you put in. That's why 98% of our live viewers are actually members. There's the link to becoming a member right there. If you are on an iOS device, iPad or iPhone, you need to select a browser, and you need to select desktop version. Okay. If you want to follow me on Instagram and X, there's my links in the chat. I engage and follow back all my members. All right, so I will engage back with all of you. If you want free shares of Robinhood USA, there it is. Free shares of Robinhood UK, there it is. If you become a member, you can have a free song in the music concert on a Friday, and you can join me on stage as well, members only. There is the music there. If you want our free training, we don't sell you our training, we provide it for free. Oh, hello. We've got some new members being gifted by Brian Bynum. Brian Bynum has just paid for 5 memberships. He's got a 1-year badge, nearly 2 years now he's been a member, and he has just bought with his hard-earned money 5 people memberships. So please do thank Brian for your memberships. Just Jeans has just become a member. You get many, many perks when your badge becomes 1 month. If you renew it, we can give you the free training on Discord. There is a Discord link on Discord. You become a premium member and get the higher level of training straight away, one-on-one training with Ed Nevia, Sensei, priority treatment on Discord. It's only a couple of bucks if you want that, or you can get a free plan, which is slightly lower on Discord, on YouTube, Discord, once your badge becomes 1 month. You come into the chat, give me your Discord username, and I will upgrade you. Montana has just won a membership from Brian Bynum. What else can I give you? I've given you all the links there. The membership video is there, so you can see what you get. Seeking Alpha and Alpha Spread if you want my software that I use. Wow, I was dead right. Big announcement today. Look at this. My best call of the year so far. Virgin Galactic. Look at this. Right now, Virgin Galactic, a stock that I said was about to explode. It's gone up 10% today. I've just put out a video that is going to go viral, I anticipate. This was the event I was telling you. It could easily now go to $100. Now, for those of you that have not seen this, I will give you the link right now. This is a live stream that went out this afternoon. Oh, hang on.
Joshua donated $2 through a super chat. Can you look up Flight Token on their web?
Can I look up Flight Token? Sensei Crypto does all our crypto for us on the Sunday show. I am not the crypto expert at all. I hand that to Sensei. So that is Joshua Ewer. That's the best person to speak to. Is on Sunday. Sensei will do a chart for you as you are a member. And you did a super chat. Sensei will do a chart for you now for your favorite token, which you said was Fly Token, on Sunday at 3 p.m. Now, folks, I'm just bringing you this. We've got 1 minute to go before the bell goes. This is our prepare for the FOMC. You need to go and see this quickly. I put this out. Sir Richard Branson is back. This stock here, I gave you a full breakdown of the history of this and why we see it going to $100. All right, it's now up 10% today. This video here, let me give everyone the link. You have to see this. Greater gains here than Bitcoin, XRP, you name it. You cannot afford to miss this one. I'm going to put it in the chat. Must see. All right, I know more about Virgin Galactic than anyone, and if you follow the video, you'll see why. Please go and watch that today. You need to know what's going on there. All right? Okay, we've got 30 seconds before the bell goes. We've got a walk and talk tonight. We're going to discuss it's a live phone, and you can actually be on the call with me with the walk and talk tonight. You can actually join in and be on the call with me tonight. Very exciting, and we're going to discuss the event for tomorrow. Okay, we've got 5 seconds to go before the bell goes. Here we go in 3, 2, 1. Okay, I'm going to record a video that people need to look out for. Okay, this is no joke. This is no joke. XRP. I'm going to put this on the screen. XRP. XRP, and we're going to go over to SPCE as well. SPCE. Okay, this is the big story of the day. I'm going to turn the studio red. Sorry, green, I beg your pardon. And I'm going to do this now. Right. I'm going to go down through the comments. A great video. Thank you very much. Very informative. Did you watch it all the way through? I hope you did. Glad I bought some Virgin Galactic today. Congratulations. I see a lot of people really getting into. I tell you what we're going to do. We're going to make a viral moment for Virgin Galactic. 100% XRP investors are going to love this. So I'm going to do a poll. Let me do this now and let's see what you say. In fact, I tell you what we'll do. I won't do a poll. I will simply ask you. In the chat, if you would like me to do a live pump event right now for XRP and Virgin Galactic. XRP and Virgin Galactic. Simply say yes in the chat. Copy and paste. I want to see the chat rolling through. Because if you would like me to do that, I'm going to set up an event right now, which I guarantee will trend. I guarantee it'll go, can't say it'll go viral, but it'll probably do 10,000 views. And you'll see this, you will see this pop.
Thanks for everything, Martyn.
You are very, very welcome. If I see some yeses in the chat, we'll do it. And we'll all do it live. We'll be together. I can guarantee you a viral moment for XRP and Virgin Galactic. All right? So put yeses in the chat. Let me see. I want the chat to be absolutely full of yeses, if you want to see that. Let me start to prepare something then. Let me start. I'm going to prepare it on the off chance that you do it. So let's see. Okay. This could be massive. All right. I want to do something that really makes a difference. Okay. This is what this channel is all about. Okay, and I'm going to add the word, so we'll do that. I'm just creating a thumbnail in the anticipation that you do this. And if you do this, if I see it in the chat when I look in a second, we'll go live and expect something exciting. And remember, I'm doing it for my members. I'm doing it for my viewers. I'm doing it for my members, really, not the general viewers, because many of the XRP army, not all, but about 10% have walked away from me because I don't do XRP all the time. But I can't do it all the time. I'm not an XRP channel. I'm here for everybody, not just one thing. But I do get people behave that way. And the moment I don't do XRP every day, they unsubscribe. And I've lost a few hundred, but I don't care. I'm doing the right thing for the investors, not for individual gamblers. Okay? That's the way this channel works. I'm not going to change that for anybody. Let me put that up there. Virgin Galactic is exploding. Absolutely exploding now. As predicted. No question about it. I told you it was coming, and it's happening right as we speak. My investors will be absolutely jumping up and down for this. I'm so pleased for all of you. I called it today. I could have made a ton of money for myself if I'd done it, but I'm doing what's right for the members, not what's right for me. Save as. Okay, let me see. XRP, SPCE, pump. Look at that. Virgin Galactic, absolutely exploding. I told you everyone today that this was going to happen. It's not what you know, it's who you know, right? That's all I'm going to say. Told you I work for Richard Branson. Make of that as you will. Told you my godfather's Kenny Baker, the man inside the robot R2-D2. Told you that as well. Let's have a look. Yes, yes, yes. Okay, loads of yeses. All right, you want it. Here we go. So, look at that. Was I right or was I right? Okay. So stand by. Let's hope this time no one just jumps the ship and sells it at the first opportunity and as weak hands. It's would be a travesty if everyone starts doing that. But I don't think so. Okay, so I'm going to create, go live, reschedule stream, reuse. Okay, here we go. Okay. XRP, Ripple, must see news for you. Okay. Okay. Put that there. Okay. Scroll down. Let's change that. Okay, nearly ready. Yes, Leah. Sorry, am I live? Yeah, I'm live. What's up? What do you want? What do you want? No, just tell me what is it? Really? You're joking. Okay, so you're on it, are you? Okay. All right. Got a bit of a crisis here, folks. We've had some big wins, and we're dealing with a bit of a situation right now. Bloody hell, that's a bit scary. Wow. XRP. Bloody hell. Leah just told me something that's a bit scary. Half the bloody roof's blowing off. Anyway, there we go. That's great. Live shows. Okay, we'll call it that. Unbelievable. We've had big storms here and our bloody roof's blowing off. Unbelievable. Okay, let me put this in here. XRP. XRP Ripple. And put that there as well. Okay, that will do. I also want to add XRP into there. Stand by, everybody. XRP is going up at the same time. You wait. Okay. I've also got some information to share about the banks. So that'll go down well. We'll do it for now. We'll go live right now. Aggressive. Whoops. Why won't that show up? Okay, well, in a minute, I'm sure. Yeah. Public. March 18th, which is now done. Okay, so XRP is ready. It's rallying already. The moment we go live, every single time we go live, XRP rallies. Every single time. It's quite funny, really. Right, customization. Okay, there we go. XRP. So we're good. Now then, I'm going to send this this stream. Duplicate that. Are you all ready for it? Okay, let's get it ready. And refresh the screen. Takes a second when you make it really quick. It takes a second to come through. There it is, the XRP. Right, there it is. I see you're already jumping in there. Thank you, guys. Appreciate it a lot. I'll give you the link. Here is the link in the chat. You've got the FOMC report in the morning, but there is the link there. I will also make this live show. You can already jump in if you want to. I'm going to be live there any second now. This is what the event looks like. Okay, XRP, Virgin Galactic pump. And I'm going to tell you why I've linked the two together as well in a moment. I'm going to make this go automatically, subscribers, automatically to the event. I was going to do it to the FOMC report, but I'm going to do it into this instead. So at the moment it finishes, it will go into there. Right, that's done. All right, guys, we're going to go straight into it now. I've given you the link. Jump in. If you stay where you are, it'll automatically take you there, or click on that link and go there. It's an XRP Virgin Galactic pump. We're going to have a lot of fun with this, and I'm looking forward to this one. This should be really good, bringing our two top assets together. So it's going to be quick. I'm going to jump straight in there now. So everyone jump with me. Let's get ready to... let's get ready to rock and roll. You ready? Tune in now for a big event. This is going to be great. Take care of yourselves and each other.